Live. We're here to talk about RBI's fourth consecutive rate cut that was announced today and whether it will help in boosting growth. So the RBI today announced a surprise 35 basis point rate cut. So it's always also typically an unconventional move because typically rate cuts are in multiples of 25. So either it's a 25 basis point rate cut or it's like a 50 basis point rate cut. But this time they announced a 35 basis point rate cut. This is the fourth rate cut since February, and if you add all the rate cuts that have been announced so far, it adds up to around 1.1 percentage points of rate cuts since February. But what is important is, its implication on growth is whether these rate cuts are passed on by banks to the final consumers. That includes industry borrowers and retail borrowers. So far, for the first three rate cuts of 25 basis points each, banks have transmitted less than 30 basis points of rate cuts to the final consumers, because of which transmission of rate cuts has become this big talking point, with the RBI having a meeting with banks, with the government meeting banks, and both of them impressing upon the banks the need to cut these rates. If you will look at the bank credit data also, you will see that bank credit offtake has been around 11% as of June end. It has not been really even growth. So personal loans and credit to services has grown well, whereas credit to industry has remained muted around 6%. What is even more worrying is that credit to small, micro and medium enterprises has grown at roughly only around 2%. So that's one big problem area. Specific to today's rate cut, we have seen the State Bank of India announce a 15 basis points rate cut in its MCLR, or is it basically its lending rate. So hopefully other banks will take cues and pass on these rate cuts to the final consumers and borrowers. The rate cut comes at a time when the concerns over growth slowdown have really increased, because all indicators so far are showing that the economy is slowing down. If you look at your CMI data, which talks about fresh investments, that has slowed to 0.7 lakh crore. A fresh capital expenditure into fresh projects has slowed down to 0.7 lakh crore as of June end. This was around more than 2 trillion the previous quarter, and for the 2-3 quarters before that. Then also, so all of these indicators do indicate a slowdown. So please do send us your questions and we'll try to answer them. The first question is, whether this rate cut will help improve credit flow to sectors. So as I said, the credit offtake data so far. So the June data has three rate cuts, right? Like the rate cut in February, the rate cut in April, and the rate cut in June. Still, credit offtake remains around 11% and is pretty uneven. So credit to industry is still a major worrying point. So it remains to be seen if private investment will get a push with this rate cut. Credit to large corporates has grown at around 6%, but credit to small and micro medium enterprises has grown at less than 2%. So that remains a worrying factor. So the next question that we have is that RBI has done its bit. What steps does the government need to take now to revive growth? So that's a question that everyone is wanting an answer to, because we have seen the RBI aggressively cutting rates. So 4 consecutive policies, 4 consecutive rate cuts. But what is the government doing to improve investor sentiment? Their economists say that the government needs to do much more. Investor and business sentiments are not really improving. Some of the budget announcements and the announcements after that have actually hurt investor sentiment. One case in point being the tax on the super rich, which is also now applicable to foreign portfolio investors who invest in India in a trust form. So there again, sentiments have been hurt. The whole introduction of penal provisions for failure to comply with corporate social responsibility norms have again seen many corporates come out against this measure and talking about why they are being penalized in such a fashion. Then this whole talk of tax terrorism after the Cafe Coffee Day founder was forced to committed suicide and alleged that, there was a lot of pressure from the income tax department. So all of these things, is talking about a vitiating investment atmosphere, and the government will have to do its bit to reverse some of its decisions, or probably address the concerns of industry which has raised this. There's also this whole thing of, there's also this talk of how structural reforms now need to be brought in. We need to see land reforms, we need to see labor reforms. But again, that's a decision, that's something that the government needs to take a call on. There's also a whole thing of how, though the government has managed to keep its fiscal deficit at 3.3% for 2019-20, how private investment is being crowded out because off-budget borrowings are on the rise. So effectively, off-budget borrowings are the borrowings that are made by public sector enterprises, but the repayment of which is the due falls on the government. So effectively, even these borrowings do add to the interest rate pressure on the interest rates, which could make it difficult for the private sector to borrow. So, the whole term of crowding out private sector investment. Then the next question that we have is, how much rate cut has been passed on to the borrowers? So as I was mentioning in the introduction, the rate cuts that have been passed on so far would be around or less than 30 basis points by all the banks. Obviously, SBI taking the lead and announcing a 15 basis point cut in its MCLR lending rates. So, the RBI governor in today's press conference was very specifically asked on, why are the banks not passing on these rates? And he said it's a commercial decision of these banks, and the banks, the RBI has had meetings with banks to ensure that these rate cuts are passed on to the final consumers. The next question is linked to this on what can be done to improve transmission of these rates. So, the one measure that was proposed earlier and that would have been implemented by, what should have been implemented by April, was a thing on how bank lending rates should be linked to an external benchmark. This would have ensured that the rates are passed on at a much faster pace than what they are passed on right now. But eventually banks opposed the move, and when the new governor came in, he promised a relook. So these norms are still under review. When asked in today's press conference on what happened, so Das said that these norms are being open for wider stakeholder consultations, and so far no decision has been taken on this. So that remains something that needs to be done. There's also this whole thing of how banks keep on talking about and how the rates on national, the small savings which are administered by the government should be brought down. Only then will the banks be able to reduce their own deposit rates. Once banks reduce their deposit rates, they will be able to reduce the lending rates as well. But again, this has been an argument that is going on for long and hasn't really there has been no real solution to it so far. Then one question that we're getting is from Naveen. He says, what Modi and Finance Minister think only repo rate increase or decrease is a solution to India's economic problem. A decrease in repo rates does help in, in at least to promote growth, because it does make credit cheaper. It helps industry borrow at cheaper rates. But obviously that is not all that is needed. Government also needs to step in, take measures, address sectoral concerns. So this week, beginning this Monday, the Finance Minister Nirmala Sitharaman has been holding a series of meetings. So the meeting on Monday was with bankers. Then it was followed by with a meeting with micro, small and medium enterprises. Today there is a meeting with the automobile sector. So and it will be followed by a meeting with real estate companies and home buyers. So obviously the government is also appreciative of the fact that there are sector-wise problems that each industry faces and is trying to find solutions to it. But yes, we still await any concrete steps or concrete announcements that the government will make. The next question that we have is from Anurag Chamola, who says, do you think banks will transfer this cut benefits to consumers this time? It does seem that there is a very positive movement, because SBI has announced a 15 basis points rate cut today. Obviously, since SBI is the biggest bank, other banks wait for it to make the announcement and then follow suit. So you should see a string of announcements of rate cuts that should follow the SBI's announcement. Obviously, but the whole the quantum of the rate cut still leaves a lot to be desired, right? Because you have RBI say has been cutting rate by at least 25 basis points and now 35 basis points, but this rate cut is say only 15 basis points. So the transmission is happening gradually and slowly, but probably not to the level that consumers want it to be. Then the next question that we have is, if business sentiments don't improve, will RBI consider another steep rate cut? So the RBI governor was asked this question in the press conference, and where he specifically said that future rate cuts will depend on the economic data that comes out. That will include your growth numbers, that will include your inflation numbers. Inflation numbers as of June was at roughly around 3.2%. So, RBI has this mandate that it has to ensure that consumer price inflation remains at less than 4%. So, the next policy will probably will be only in October. So you will have 2 months of inflation numbers that will be available. You will have the growth numbers that will come in towards the end of the month. You will also know how the monsoon has panned out and what has been the impact on sowing and agricultural production. So all of these factors, and obviously the external factors. You will know how are the whole external indicators moving. So obviously all of these things will play into what will be the next decision of the central bank. The next question is from Debayan Roy, who talks about what effect will the repo rate cut have on the home buyer sentiment in the mid-income segment. So there has been a lot of specifically on the personal loan. So besides, yes, we've had a 35 basis point rate cut, but other than that, another thing that the RBI has done, which will probably increase flow to the personal loan segment, including home loans, is reducing the risk weights on these on personal home loans from 125% to 100%. Roughly, it's the capital that a bank has to keep aside for all loans that it makes to this segment. So that seems to be one announcement that they have made that could help home loan borrowers. Another thing that they have done is that they have allowed classification of lending by banks to NBFCs for loans to the housing sector, but subject like smaller loans to the housing sector, as they can be classified as priority sector lending now. That means that at least affordable housing may get a boost, because banks are supposed to meet these priority lending targets every year, and if lending to NBFCs for onward lending to to housing is classified as priority sector, obviously banks will more enthusiastically lend to NBFCs and housing finance companies. So that could help the affordable housing segment, given the criteria and the loan amount that we are talking about. So Nayanama Basu asks us, will this help in boosting investments in the private sector? So as I mentioned, that this whole this whole thing on how the government should ensure that private investment is not crowded out. How does it do that? It ensures that it keeps its fiscal deficit in check, and consequently the borrowings that it makes from the market. But this time the government has increased the whole off-budget borrowings. Off-budget borrowings are the borrowings that state-run units make from the markets. So effectively the net impact on the markets from the public sector is really high borrowings. This could push up interest rates, which could make it difficult for private investment to step up. So investment sentiment is one thing, interest rates are another thing. So all of these factors come into play when a private sector company decides to say set up a new project or start a new investment. Does it seem like Nirmala Sitharaman has a handle on how to boost India's economy? What more can the finance ministry do? So, obviously she's a new entrant, and she's been in her post for only 2 months, and a lot of questions are being raised about whether she can handle the ministry or not. So she's already presented the budget. There have been many reactions to it. What the government is doing now and can be considered positive is, it is at least acknowledging that yes, some sectors are facing stress and is trying to take steps to address this. So they are like holding stakeholder consultation meetings. They're talking to banks and asking them, so what are your problems? Okay, you have a service tax problem, let me resolve it. Okay, you have a GST problem, let me resolve it. What are the problems that are stopping you from lending onwards to like MSMEs, to NBFCs? What are the problems that are coming in? Let me see if I can resolve them. She's also talking to MSMEs and asking them, okay, so what are the concerns that you're facing? Are you facing a credit flow problem? Are banks not lending to you? She's also asking the automobile sector, and what more can the government do to encourage or to revive demand. So auto sales have like really fallen sharply over the last few months. We can see it from the results that auto companies have announced, like Maruti Suzuki announced a sharp reduction in its sales numbers. So, there is a lot of stress that the automobile sector is facing. So, yes, the government is trying now to take steps or at least acknowledge these concerns, hear the concerns, and probably in the next few days we can see some announcements from the government, at least sector specific, which trying to remove these structural concerns that these sectors have. So that's all that we have from right now at The Print. Please, thank you for watching.